The automobile industry is one of the giants in the global economy. Since its inception, it has gone through its fair share of changes and innovations over the years. However, one of the most influential and revolutionary innovations is the dawn of the electric car. The electric car was the baby of Robert Anderson, originally floated as an idea in 1832. This idea culminated into the birth of the first electric car, the Tesla Roadster, designed and produced by Tesla in 2008. A rocky start. The infamous electric car sales has been abysmal till 2018, posting mostly losses during its first decade as a publicly held company, and it lost $1.1 billion during the first half of 2018. Slowly and gradually, the Tesla made a turnaround eventually, though its meteoric rise took a beating due to the maverick at the driving seat, Elon Musk. This daredevil came under scrutiny because of his suspicious use of social media, which led to severe market fluctuations, as well as dividends for his pet company Tesla. Things started improving. Tesla delivered a strong third-quarter earnings report in 2019, posting a surprise profit and telling shareholders it is ahead of schedule with a new factory in Shanghai. Shares spiked more than 20% after hours, putting them at their highest price that year. Its meteoric rise continued, which was a sweet turn from the doldrums this company had experienced before 2019. Nevertheless, Tesla was clinging on to its high-tech image, and the reveal ceremony of its newest model, the Cybertruck, was launched with all the bells and whistles available to Tesla, which put up a show of the century. Though the show was designed to be a power broker, all it broke was the supposedly unbreakable glass on the doors of the pickup truck. Consequently, the company's shares fell through the floor, falling a whopping 6% within one day. This stock bounced back by 23 December 2019, closing at a spectacular $420 per share. Though Tesla had landed in the crosshairs of the regulators with Elon's free use of Twitter and machinations of the stock exchange through the use of social media, it got this company great dividends in the long run. On the ground, in immediate effect, Tesla was in trouble, falling behind on its production and a failure to meet financial targets. All in all, Tesla was able to revise its plunging sales, generating $24.6 billion in revenue in 2019, buoyed by a fourth-quarter revenue figure of just shy of $7.4 billion. Tesla still didn't turn an annual profit. In fact, it lost $862 million in 2019, but that was better than the $1 billion loss the company posted in 2018. The electric car maker gave investors plenty to look forward to in the next year. It released a glossy 28-page investor update filled with photos from its new factory in Shanghai, where Tesla said it had already begun trial production runs. 2020 began with Tesla outperforming itself by opening up and making deliveries from its factory in China, the first non-Chinese automaker to do so on its own in the country, and began work on a fourth factory in Germany. And one can start to understand why Tesla stock went nuclear in the coming months. Tesla finished trading at $580 per share, more than double the share price it traded for most of 2019, and as a result had become the second most valuable car brand in the world behind Toyota. Tesla almost doubled the size of its mobile service fleet in 2019 and added 51 store and service locations, but didn't offer any more specifics. In 2020, Tesla's fourth quarter brought in a record windfall as the company announced that it had turned a $2.3 billion profit, a definite improvement over the $270 million profit of last year. All the while, its average sales price continued to drop due to the increasing popularity of the more affordable Model 3 sedan and Model Y SUV. By the end, Tesla had overtaken Toyota to become the world's most valuable car maker by market value by the end of 2020. 2021 was a godsend, strong enough when considered as a whole. Tesla's revenue rose to $53.8 billion in 2021 from $31.5 billion a year earlier. Deliveries increased 87% to 936,000 cars. It closed the year with a strong fourth quarter in which revenue climbed 65% to $17.7 billion, and net income rose to $2.3 billion from $270 million in the comparable period in 2020. The company also started producing a heavy-duty truck, the Semi, at its battery plant in Sparks, Nevada. The company began deliveries of the Semi in December 2022. Rocky forecast for the future. Amid flagging demand, steep price cuts, and ongoing drama surrounding Elon Musk's stewardship of Twitter, Tesla published its fourth quarter earnings, in which the company said it earned $3.7 billion in net income on $24.3 billion in revenue. That represents a 59% increase year over year compared to $2.8 billion in revenue in the fourth quarter. It was a quarter of unique struggles for Tesla, which included declining demand, an aging lineup, and increased competition from legacy automakers. Musk's purchase of Twitter led to a subsequent sharp decline in Tesla's stock price, which plunged by as much as 65% over the course of the year. The rout shaved billions from Musk's own net worth, leading him to claim the unfortunate designation as the first person in history to lose $200 billion. After experiencing unprecedented hypergrowth over the past few years in the EV market, which was essentially created by Musk, now Tesla faces a darker macro in 2023, with fierce competition coming from all angles. Adding to that backdrop is Musk, who has essentially gone from a superhero with a red cape to a villain in the eyes of many investors, after the ongoing Twitter fiasco has cast a dark shadow over Tesla's stock. The view of Musk as asleep at the wheel and distracted by his new ownership of Twitter has also hurt the brand's image with consumers, who suddenly have a new crop of EVs not named Tesla to choose from. Tesla slashed its prices, first in China and then later in the US, which experts say was an attempt to juice demand before the end of the year. In spite of the dire predictions, Tesla is still going strong in 2023. The first quarter numbers represented a 36% increase in deliveries compared to the 310,048 reported during the same period a year earlier, and 4% growth in deliveries. Now sales of 4 models are on the rise, which are produced at 2 vehicle assembly plants in the US, one in Shanghai, and another outside of Berlin. In March, CEO Elon Musk announced the company plans to build a new factory in Monterrey, Mexico, a day's drive from its factory in Austin, Texas. Estimates included in the fact set ranged from 410,000 to 451,000 deliveries expected for this year. But Tesla has to be cautious in its rapid progress, especially in light of the servicing complaints emerging from its customers. The first quarter of 2023 was marked by repeated price cuts by Tesla and posed a challenge to competitors, including Ford and General Motors, who are trying to gain market share in the fully electric vehicle segment domestically. Tesla shares rose more than 60% in the first quarter to close at $207.46 this year, ahead of production and deliveries report. Under the spotlight. In spite of the good news continuously coming out of Tesla, Elon Musk's questionable business ethics have come under fire, and his company and ventures have started to pay the price for him shooting at the hip. For example, take Musk's approach at Twitter, which has had terrible consequences for the company. From when he took over 4 months ago, merely 17% of Twitter's workforce is still available. The company has lost 40% of its revenue, with advertisers jumping ship constantly. There is the very real possibility that it may have to file for bankruptcy soon. The trust deficit that Musk's behavior fosters spreads across his different ventures. Part of his defense in the Tesla trial was even to tell us that we shouldn't trust him. Musk has now broken a record for personally losing the most money of anyone in history, $182 billion, since November of 2021. He doesn't seem like a star you'd hitch your wagon to. Elon Musk is trying to renegotiate $3 billion of the high interest rate loans that he took out to buy Twitter. Can you imagine what terms he's going to be offered now? Would you trust him after he's tried to back out of that very contract? In addition, because of Musk's actions, an estimated 83% of Twitter's workforce has left, and the company is being sued for non-payment of rent in multiple jurisdictions. What's up ahead? Pro-Musk or anti-Musk, the fact remains that Elon, with his multifaceted company, is bound to leave an indelible mark on the financial markets and the world in general. With the space program already underway under Tesla's designing, this mark is certainly going to reach in the far reaches, beyond the realm of Earth. That's all we have for you, folks. Join us next time.